Well, hello there. I am Paris Williams from Next Level Financial. We are excited to welcome you to our webinar, The 5 Levels of Financial Health. I have our lead CFO, James Williams Jr., with us today. All right, so we are going to jump right into it. This is exciting because it's so relevant to so many business owners who are really just trying to move up in multiple ways. But today we're going to focus on the financial health of your business. James, take it away.
All right, so great to be here and speaking with you. Ready to jump right into this. So, what are we going to talk about? So, we're going to talk about why financial health matters. Some of that will be fully understood by you. We'll go into this 5 level framework that I created, and then how to assess what levels you are. And of course, the most important part is how do we move up to those next levels. All right. So just jumping right into it. So why is this important? Well, we all know why this is important. You would not be listening to this webinar if you didn't think this was important. We work a lot with a lot of commercial real estate businesses. So some of this is geared towards to that industry, but this cuts across all the various industries that we work with as well. But just thinking about financial health, the number one critical identifier of financial health is really cash. That's where it starts. That's where it ends. If you don't have it, you don't have you don't have much at all in the way of a business. So cash is key, and a lot of times we struggle, or businesses struggle with cash, and some of that could be because it's a cyclical business, or because the cash conversions are so long. So you have to pay your workers, and then you have to then you bill your clients. You do the work, then you bill the clients, and then they say, okay, we're going to pay you in 60 days, right? So that's such a long time in which you have from cash flow coming in from the time you put cash out. So cash is critically important. It's also important to note that sometimes when looking at your financial statements, you may be looking at it and you see, okay, I'm profitable. My bottom line, my net income or my EBITDA is positive. But gotta hold on for a second. It's really about cash flow. Profitability is important, but cash flow is really key there. And we know that I would say most businesses fail because of cash mismanagement. A lot of times the opportunities are there, they're rolling in. I'll talk through a couple of examples of what I've seen in related to this. But cash mismanagement is definitely a challenge, whether you are a growing business or just a stable business. Cash is still always important.
Yeah, I was just thinking about when I first started at Next Level Financial, and I'm going to put myself out there. I thought, man, if these businesses are making $20 million a year, um, what problems could they have? Turns out there can be a lot of different challenges that come up if you're not financial healthy. It's not necessarily about that top line number always. It could be a smaller company that has less revenue, that has more of the things in place that you're going to talk about. So I think that's something that a lot of folks probably are like me. They might not admit it, but literally, there's probably business owners out there that thought their life was going to be so much better and easier as that revenue kept increasing.
Yeah.
Maybe that's true, but maybe not.
Yeah. There's a lot of sort of philosophy that if you continue growing your revenue, as long as you continue growing it, you're going to be okay. I heard one business owner say his goal was to be able to outpace expenses by continuing to grow revenue. And that is a good. We need revenue. We need it because if you don't have that, then there's gonna be some challenges. We just have to kind of prioritize what we're putting emphasis on. And in this
Hmm.
case, cash flow is important. Profitability is important. Cash is the most important. But we're going to talk about some other things outside of that as well. Okay, so when you look at this, this is the framework that I put together, and really when I was really thinking about this and working with different businesses, there's sort of a trend in terms of like where different businesses are in their level of financial health,
Mhm.
and so there's the bottom level, financial survival, all the way up into financial excellence. And we're going to talk about these different things. But the key here is the goal is to, wherever you are, to grow to that next level. And we're going to talk about a little bit about, whether or not you can skip a level or not. The key is you want to put the things in place to build a firm foundation to grow to that next level. So let's jump in. All right, so level one, let's get into it. So financial crisis or survival. So what are the symptoms at this level? So what I've seen is missed payroll or close to missed payroll. There's fire drills all the time related to cash. There's loans that companies have to, personal loans that companies have to inject in the business. For example, there's a company that I work with that they rely on the owners' financials to prop up the company during challenging times. And that's not a bad thing necessarily, but we want to grow out of that. But that is what's happening. If we are in that state where we're having to provide loans, personal loans, to the business, then we know that there's some challenges there. And obviously you know that. So what happens at this level? So low levels of cash, what this is saying is you have very low levels of cash, maybe 2 weeks or less of cash. Essentially not a month, they, used to say, they're saying that there's too much month at the end of the money. That's this level right here, too much month at the end of the money. So, in 90-day AR, so this is a big one. I've seen companies that have large AR balances, but that AR is not coming in. Those receivables aren't coming in, and they are really tightening the business. So that's an issue. But these are things that we see at level one, the financial crisis level.
Can
So
you
what
talk a little bit about, sorry, unclear financials? Can you just go in a little bit more about what that means and what that looks like?
It just means that either there's no, or I should say, it should be unclear or no financials. And so what it means is there's numbers are not, the data is not being tracked, or it is being tracked, but there's no one that is tending to it, meaning there's not people who are checking to see if the numbers are correct, if they're flowing in correctly, if they're going into the right places. So in accounting, there are different categories and buckets that you need to account for. And a lot of times with either smaller businesses and even sometimes bigger businesses, the money or the dollars aren't flowing into the correct buckets as it is presented on financials. So it could be that financial statements have not been done either. I've seen that where people just have it, like everything is just, it's just not being done. So if your financial statements are not being done, you don't really have a really good sense of where you are, and that's a challenge.
Okay, now let's act like we did not go forward. And what are the action items for those folks who are in financial crisis or survival mode?
Okay, so the focus here is really cash, right? So unclear financials, like I was saying before, that is a challenge, but that is also a challenge probably for another day or another level.
Got you.
Really need to focus on bringing cash into the business. So bringing cash, so what I talked about before, those 90 day receivables where clients, if clients aren't paying you, as on time as I guess they should, or it's just long payment cycles, we need to work on putting resources consistently following up with this. And I've worked with companies where we have, we have 180 days of receivables outstanding, so long. So just really putting financial strain on the business. And for a while it was fine, but what ended up happening is because the company stopped growing as fast,
Mm.
then the exposure where those that it had with a longer receivable start to really show up. So sometimes when you're growing fast and money's coming in, and even if it's coming in late, it's still coming in. But if you stop growing as fast, that money really starts slowing down, and that's what happened in this particular situation with this company, where money started slowing down, projects started being put on hold, different things started happening in the economy, and money started slowing down. But we still had this big receivable balance, cash that's supposed to be coming into us, but it's not coming in. It's coming in slowly, and we didn't really have a real good habit of bringing it in. So the goal here is to really divert resources to, let's get money in. And if we gotta renegotiate, let's renegotiate. And what that looks like sometimes is saying like, hey, we'll take, we'll take 10% off of this bill if you get it in within the next 2 days or something like that. You want to do it, you want it to make sense, you want to lose a lot of money, but if you're in a situation where you need money coming in quickly, let's negotiate those terms, so that we can get cash in as fast as possible to get us to a point of stability.
Okay. Though that's really good. And I really appreciate your point earlier about like, yes, you need to get your financials in order, but that's a problem for the next season. Like to just focus in on getting the cash because it gives people something that they can really do. Because I would imagine if you're in crisis mode, you're thinking, oh my gosh, what do I need to do? Like, we got to work on this, we got to work on that. And like to focus in the team in one area is powerful.
Yeah, yeah, super key here. Now that next season that we were talking about is here. It's this season, level two. So level two is where you got a level there's a level of stability happening, but it's still very much reactive. And so we've got some cash in the bank, a little bit more than before. Um, um, and we're still in a place where we don't really have an assessment of really what's happening. So we've got a little bit of cash, which is good. Now that season where we need to really start to building towards understanding our numbers better. This is where that happens. So we need to start, getting someone, at this point, we have to have a good bookkeeper, we have to have a good accountant, or a good controller here at this level to be able to really just start to shape and bring the financials together so that they can then inform how we work going forward.
Okay, but wait, you're getting to the actions already. So did you already talk about sort of the reactive, like everything that's happening? I could imagine that people are excited because they've moved out of crisis mode, right?
Yeah,
So they
yeah,
might feel like, hey, I'm doing great. Listen, I got 4 weeks of cash. My books are late, but I'm getting my books
yeah,
done.
right, right.
And, like I would imagine if people have moved
I'm,
from that
well,
one to the, they must
about
feel.
celebrating at each level. So you got to celebrate at each level. So yes, something to be happy about, but still a lot more to go. So yeah, but to your point, the issues are that we're not getting, books aren't being closed on time. It's taking, and I've been working with companies to where the last time they closed books, it was like a year ago. So this part is critically important. And there's no forecast, there's no forward-looking visibility, and so, it's just hard to, you don't have the information to move forward. So then to your point, what we then need to then focus on is here where we've got a little bit of cash. So cash is still a very important part of the puzzle here. And so let's start figuring out how we can start looking ahead a little bit with cash, Okay, so like let's build a forecast so that we can properly manage cash, where we know how long it's taking us to receive money. We're managing those monies that we owe, so we may not be paying it right away because maybe they gave us 30 days to pay, so we can pay it later. But we're just really figuring out that cash management process here, building up into like I said before, like let's get the books cleaned up so that we can understand really the bigger picture of where we are. So that is the area of focus at level two.
Okay, that's great. Do you have, I know it's probably different depending on the size of the company, but I was just thinking about how long it might take a company to go from, um, to move up to stability. This seems like it would take a long time,
Yeah,
but you have any idea about how much time it might take?
it is. It's absolutely different based on the business, the timing, the size. So um, the cash part is really just is a function of like how fast can we bring in cash. Whether it is an investment that came in that helped prop us up, or whether it is really just collecting on those receivables quicker because we're putting more emphasis on it. So that could take time,
Yeah,
but it just really all depends.
yeah.
But what I do know is one of the areas where it does take time is level two, because level two involves a lot of times cleaning up books
Mm-hmm, mm-hmm.
on how long the business, the company has been in business and how long the financial statements have been neglected or not closed consistently. That could take some time. So level two is one of those areas where it's critically important. It's part of building that foundation. But it could take some time here. So I've had situations where I started just working with companies, and um, it took um, it took 3 months, 6 months to really get those books in order to where we're consistently doing what we need to do. Management has clear visibility and understands where things are at. So this is a stage where you don't want to get discouraged. You just keep at it, and you're building that foundation, and it's going to pay dividends later.
Yeah, and I would imagine, I mean, here you have a team. You have a good accountant, possibly an accounting team, or you've hired someone to come in and clean up. So it's not, a one person job at this point to get to stability. And I think some people literally, if they're coming out of crisis, don't realize the investment in resources and time to really get to stability. So I
Yeah,
think there's also, this is not like a one person job, but it is coming up with processes and all of
yeah,
that maybe they haven't had in place before. So it's an
yeah.
investment.
Yeah, and to your point earlier, the investment is key to understanding that to get the resources necessary to do this is important, and it also can determine how fast. Uh,
Hmm.
I remember working with this company one time where we were planning on bringing in some additional help to help clean up the books, and it was something that they just didn't feel like they wanted to do or needed, and the resources that existed were going to handle it. But it ended up taking way much longer than what it could have taken to do it. And so, it's kind of that saying that you know you know if you gotta invest, you have to invest now to get yourself to the next level faster, versus just kind of like inch by inch, step by step going. So that's an assessment that needs to be made in terms of the allocation of resources at this particular stage.
Got it. All right.
Okay, all right. So level three. So here, this is where like we're seeing growing. So these are more positive moves, right? So we're getting to a good place here. So this is a good sort of the foundation is being set. You have cash and money in the bank, and so here, but in this particular stage, you're not all the way there yet. but you're moving in the right direction. So you have some control. You're able to look ahead just a bit to see what's happening, but it's still reactive. There's still challenges that are um, that are popping up that could honestly put you back into the previous level. And by the way, these levels, it isn't all just up. Sometimes it could be a step up, step down, two steps up, one step, so just keep that in mind as far as the level of your level of expectation. But the goal obviously is to continue to push this higher. But at this level of growing financial health, you have a little bit clearer visibility on your books. You understand the pipeline that you got coming in, and you've got decent amount of cash to be able to 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 move you forward. Not optimal, but you're growing in the right direction.
You know what I was thinking? I think I automatically think about maybe a startup company that's sort of like, okay, I started at survival mode and I moved up, but there's definitely people out there who are, second generation, third generation, or bought a business. So you can come into a company that's already, you know, right here at level three, growing financial health. That's really nice if you can
Mhm.
come into a company that's already there. There's still room for growth, but there's a lot of the things that you mentioned earlier that are already in place.
Yeah, that's a good point. I mean, there's a lot of folks out there that have recently purchased businesses,
Hmm.
and so they're coming into it that have a little bit of a different experience in a startup, and so um, you don't have to go through all the levels, but understanding where you are, whether it's level two, three, or four, is critical, and what the key areas are to focus on. So this level three, what we're focusing on is really focusing on being more proactive, looking out. So we have here's a rolling forecast. So this is what we do with our clients, where every month we're looking out the next 6 to 12 months to see how things are going to be shaping up, and we're able to look at the different scenarios around that. If we purchase some equipment, if we hire some people, just different scenarios around it helps us to be able to understand what's out there and help us to make better decisions. So we're putting in that rolling forecast, where we're updating our forecast on a monthly basis. We are looking at our different levels of projects, and we are understanding more clearly, if we are working in project-based business, how each of those individual projects are doing. So we're really getting some more clarity there, and we're understanding where we need to make adjustments. And that's the key here. And then, so that's important at that level, and also hiring discipline. I had this company where we were growing at a pretty fast pace, and it was just assumed that we were going to continue to need more people, and we were doing some overhiring. And there are some philosophies where there's different groups or books out that say that you need to hire before you need it, and that's all well and good, but we still need to kind of be prudent about this. And that's where having multiple voices in your circle, to give you different points of view, can be helpful, so that it helps you to come to a better decision if you're making these types of decisions, if you're running a business. But anyway, with this company, we were growing at a pretty fast clip, and then things started to slow down, where some of the contracts weren't coming in as expected or anticipated, and what we thought and what we had planned for in our budgeting was just not coming to fruition. But we had been acting as if this was going to continue on, and so we were bringing more people to
Mm.
to help with the work. And then fast forward, it then is a situation where the burden the weight of employee payroll is really sort of dragging the company cash flow and profitability down. And so that is something that cannot happen for a long period of time. So the point here is we just need to be prudent, and part of that hiring discipline means that we're looking at cash flow, we're forecasting cash flow, and we're forecasting long-term to and running different scenarios so we can see what's see what could happen and try to make the best decision from that vantage point. So these are the areas that need to be focused on in that growing financial. Things are going good, but we still need to make sure we have these disciplines in place.
Well, and see, the growing financial health was so exciting. I mean, come on. If you came out of the struggle bus and now you're here, I could see how you could end up being undisciplined in hiring. I mean, you use the word prudent, I think 3 times. So I just keep thinking about what you said around the team and voices. That's probably an important part of this level of just making sure that you have multiple voices to say, hey, looking out in 3 months, it looks like we're going to have more people than we actually need. What are we going to do about that?
Mhm.
Yeah.
Yeah, 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 critical. Okay, so level 4, we call this financial optimization. So at this level, what are we? We're confident, right? We've got some swag going on. Projects are profitable, but there's still room. There's still
Mhm.
opportunities to be had. But
So
we,
let's talk about these symptoms though.
yeah, what the symptoms are, we got 2 to 3 months of cash, which is the metrics of the 2 to 3 months of cash, which is good. Not great, but it's good. And our margins, our gross margins are good, which is good. I mean, we're looking at our financial statements, and our financial statements, since they're all cleaned up, they're telling us that our projects are healthy, our products are healthy, and we can see that because the numbers are there in front of us. So we're feeling good at this point. And debt is under control, right? So this is good. This is good, not great, but it's a great place to be after moving up from those previous levels. But we still want to continue to grow, right?
So all the things in level 3 that you talked about, they have all that in place at this point. So they're
Mm-hmm.
feeling good.
Yep, yep, yep. All right, so but what do we focus on? So here we
Hmm.
start looking into a little bit more into the future, where we're planning longer range. So I would say just think of it like this: when you have when you're in financial survival, you're only thinking about maybe the next couple of weeks, right? That consumes you, right? Because
Hmm.
have cash, you need to bring in cash to be able to pay your people. You need to have cash to be able to do the different things that you need to do in order to keep the business going. When you move to level 2, you've got some room, and so your span of vision is probably going out to a month, right? So you're looking maybe a month forward at a time. You can see that. Level 3 is 2 months. You can see 2 months out. We can see level 4, we start looking now long further. So 3, 6, 9 months, right? And really putting in place plans that is going to enable us to invest in high profitable projects, right? And people. So we're looking and we're planning for opportunities that are going to yield benefits for us. We're also figuring out how to. You've got a good healthy business, and we have a comp structure where we're gonna to share with our employees. So we've got some plans in place that are looking more to more to what's going on in the future. So that's what we want to do. So things are looking good, things are feeling good, but we want to focus on these things. That's going to really take us to that really higher level, and so that we can see out much further and we can really develop a good business where we're going to have good people and we can benefit from financially.
And there's probably a lot of other things that they could focus on as well with, all of
Yeah.
the healthy foundation that's been built.
Yep. Yeah. Yeah. There's other things like just even this investing in this is part of capital planning. So investing in technology that is going to help and enable further scaling of the business and growing of
Hmm.
the business. So that all kind of falls into that particular bucket. So yeah, there are other things that we're looking to, but this stage is about focusing on like that investment for the future. We're not just looking at what's going on right now, but let's focus on really investing so that our future is much more scalable,
Hmm.
and is much more profitable.
Yep, that's great. But I can't wait for this one.
Financial excellence. And
Here it is.
okay, so again, we're feeling very good. We have our profits are predictable. We have capital freedom, which means we're not saddled in debt, or we don't owe a whole lot of people. And if we're at that point where we feel like we have this is a strong enough business to exit, or to turn over to employees, or to turn over to family members, um, building a strong and solid business where the financial area is financially excellent, is what this is. So in this particular stage, we've got 3 to 6 months of cash runway. Our profit margins are high, and we have reserves. So there still are some things that we can focus on. Right? You can always get better, um, but this is an excellent level to be at.
Capital freedom. I love it. This is great. I wonder what percentage of businesses are really there because it seems like a lot. I could see maybe people having like one or two parts of this, but they're not, fully there. I wonder, you have any guesses
Yeah,
on for small businesses like that,
yeah,
we would work with?
yeah. It's smaller, so
Yeah.
I would venture to say somewhere between, maybe it's like 5%.
Yeah.
So not a large number, but they are out there, and it is definitely possible.
Yeah.
And the thing that we want to really just keep in mind is, the financial health of the business is one area of your business, or other areas of the business.
Yeah.
But this area is an area that is like the grease in the machine, if you will. It
Mm-hmm.
helps everything else run more efficiently. So the better this area is, the stronger the whole business can be.
Yeah, I agree.
So what we're doing here is we're focused on, scale the business, operational wise, so investing in some of that technology like I talked about earlier, or just expanding, investing in other markets. We have a solid business where we are, but we don't have not even solid, but excellent business. We don't have to get complacent. We're strong enough to be able to handle going into new markets, trying different things out. We're able to take more risk than we were at the earlier stages. Um, and we're planning for liquidity events, and what that means, so we're planning for either the sale of the business, or a sale of a piece of the business. So doing those things are what we're doing at that financial excellence level. We have enough room and space to be able to really think about the really big picture of the business and how we move forward with it.
Yeah, I just appreciate the vision that someone could have, that's maybe right now at level two to maybe over the years get to this point and the specific actions that folks could take. This is good.
Yeah, 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 yeah. Okay, so let's turn it back to you, and you may be asking yourself like, okay, well, with my business, where am I at? Here are some questions that we've included in our questionnaire, where we have an assessment where you can figure out what level you're at. You may just have, by looking at some of these slides and the things we talked about, say, okay, yeah, we're probably here in this space. But here are some of the questions that you can ask yourself, and kind of figure out where you're at, and then those slides are some of the things we talked about in terms of action points. Those are the things that we will focus on that particular level. Okay, so here's some really some maybe call it some tricks of the trade or tips here. So how do we move up? So the key here is that you have to grow up.
Mm,
I heard someone say this before. It's like don't try to skip levels, grow up to the levels, to grow up to each level. So really
mm-hmm,
getting those fundamentals down. I had it to where I was working with a business and the foundation of the financial picture wasn't great. The financials still were not in a good place. But the owner just wanted to continue to do things that were at the higher level.
mm.
That level is fun. It's fun to do all that stuff at the higher level, right?
Yes,
Uh,
yes.
and but it only gets you so far um, if you're if you're working with information and or you're having cash flow issues and but you're trying to do your you're trying to go into new markets, you're capital planning for new markets, or so really emphasis here, really like wherever you are, really grow through that area. The second point here uh, is that it's important. These are the people resources that are important as you grow through. Depending on the size of the business, it could vary. But if you're in the financial survival stage, and you're a um, let's say you're $1 million, $2 million business, you really need a really good bookkeeper to help you or an accountant to really help you to really get your numbers together so that you can understand what's happening there if you're in that level one or level two state. And the controller level then helps you at some of those higher level states. It helps you to really understand your profit margins. Your CFO can help you with that as well. But understanding some of those things that give you visibility and vision into the future is what the controller and the CFO can help you do. And then of course the CFO really is also about helping you look forward, helping you to plan for the future, whether it's 3 months, 6 months, 12 months, 3 years. That CFO is helping you to do that. So make sure that, don't be like the person or the business that I talked about earlier um, where they did not want to invest in people resources
Mm.
and help clean up the books. And it took so much more longer. I think it was like 6 months really to really get things going on the right foot. So really invest in the infrastructure in your financial area, and it'll pay itself back as you go. And then of course you can't forget about process reporting, accountability. I'll say technology is a huge part of this.
Hmm.
So technology can help you go faster and smarter. Um, it's important to vet and understand the technology that you're using because I've also seen it to where it's like people are just buying things and then don't really use it fully or don't really use it correctly. Just trying to put a band-aid on it. It is important to really invest in whatever technology that you're using so that you can use it and have some accountability. So like we were talking about earlier, having other voices that can help give you a different perspective than what you may have, or the other voices of other people on your team, so that you can come to good, solid, strategic directions.
Yeah, this is so good. I mean, really, this is good. Because I mean, I get a lot of questions about like, oh, we think we need a fractional CFO. And then I'll get to talking to them, and maybe it's a, $10 million company, and they have one person who's titled CFO, but they're actually doing all the accounting. And I'm like, whoa, what's happening here? So I feel like, especially this point on building the financial infrastructure, that's super helpful to people about like, okay, what do I need if I'm here? Or what do I really need if I'm here, but I don't have a team yet? I love that part. I love
Mhm,
it.
mhm.
And it's good.
Yeah,
This is
yeah.
really good. just how to move up because you don't have to jump up to the top. You can't. You have to master the fundamentals. So I
Gotcha.
think that can really empower people um, to just realize if I stay in this zone, I will grow.
Mhm.
Just, stay in the zone. But like you said, we be wanting to have fun. We want to have a good time and do all of the fun
Yeah.
stuff without actually getting those fundamentals in place. But I believe the people who are watching this today, they were
Mhm.
drawn to watch it because they thought, okay, I need to have some awareness about where I am in my business. So I think the folks who are watching this, they're not like everybody else.
Right.
Okay. Well,
Yeah.
good. Very good.
Yeah. Right. Okay, so this is for a summary of the levels and to the traits and metrics. So you see at the top of the first level, that crisis level. So there's cash, there's fires with the cash, fire drills, 2 weeks of less than 2 weeks of cash. What are we doing there? We're triaging. We're focusing on let's get money in 100%. We're not necessarily worried about cleaning up our books. That's important, but job number one is how do we get more money in? That's what we're doing there. At the stability level, that's where we're about. We're kind of breaking even. We've got a little bit of cash, 2 to 4 weeks of cash. But our priority is like more visibility. So let's manage this cash a little bit more. Let's look out a little bit so that we can see a little better so that we won't keep running into these crisis situations that knocks us back into that crisis state. So at the stability, you're a good point, but still a bit fragile to going back into the crisis mode if you're not careful to go through it. I think that level is a critical level in terms of that. If you get that one right, then you're on a much better footing to continue to grow up through the next levels. And of course, growing financial health is where most of us want to be. Is we're turning positive there. We're growing. We don't have a lot of direction, but we are growing. We have more cash in the bank, which makes us feel good. And but our focus there is let's look forward, let's forecast so we can really navigate through and make sure that we don't get bumped down to another level because we're over hiring, we're doing something that is not going to be helpful in the long run. And then, of course, we got to optimize, and we're being more strategic at this point. And we're doing more planning, more longer range planning, and investing in things like technology, a lot of people, projects that are going to pay dividends in the future. And then, of course, we want to get to that excellence because of that why there's abundant cash at excellence. So why not? Let's go there. And that's where we're scaling. That's where we have what we need to go into new markets, different places, take on more risk that has the opportunity to bring us back greater levels of return. Okay,
Okay, do you want me to go into this or do you want to?
you go for it.
Cool. Okay, next steps. Because I know you're like, I think I have an idea where my business is right now, but I'm not certain. We do have a financial health assessment, which James covered a couple of the questions that are on that assessment. And we will plan to email it to everybody who signed up for the Zoom. And if you just send me an email or a note, you can get that free financial health assessment because really half the battle is figuring out where am I before I make these decisions, right? About what to do next. So it's pretty quick too. I think it's less than 10 minutes to fill out that questionnaire. Give you a general idea of what level of health your business is at. And then you can also schedule a free strategy call with our lead CFO, James, just to talk through some of the things that you learned through that financial health assessment. Or if you have an idea of where you want to go or what your next step might be, and you want to have a conversation with him, I will also add the link to have a strategy call with James. So, those are some great next steps. And we would love to talk to you more about what's happening in your business.
Okay, so this just wraps it up, and we kind of come back to this leveling. And where we want to be is always just growing to the, we're growing to the next level. We're not necessarily trying to skip, and where we don't have good financials, we're planning to go into new markets and do different things without really having an understanding where we are. We're not doing that, but we're growing through. And remember what I said before. The way to look at your financial function and your financial department is that it is the grease, right? It is the enabler of, of all the different things that you're doing in other parts of your business. So those other parts are critically important, but this part here gives you the ability to do it. So we want to make sure that this part in your business is strong so that your business can be the best it can be. Because without a strong financial business, your business is without a strong financial area or function, your business is not going to reach this high level of potential. It's just, that's just not going to happen. So we want to invest in it. We want to focus in on what we know we need to do. We want to grow through these different levels till we're just at that, we're maintaining at an excellent pace.
We have 2 minutes, so I'm going to ask you two questions.
Okay.
First is a question I get a lot, which is what's the optimal time to bring on a fractional CFO?
The optimal time, and if we look at it just in the context of this framework here,
Yeah.
Um, it's probably three growing
Okay.
financial. If you're moving through financial stability, the CFO fractional CFO can help guide through that 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 number three or that third level. So I would say that optimal starting is three, but we can do two a little bit as well. But in of course, the other levels, and up into 4 and 5, where the CFO can be really important for helping you to plan and make investments for your future.
Okay. That's great. I think I got to my end of time right there. But thank you for answering that question. This was fantastic. And we hope to hear from all of you. And I hope everybody just takes the rest of this year to move up one level. We got half the year left, six
Yes,
months. And I think if we go all in, we can all move up a level
I
or
like that.
grow up.
Grow, yeah, grow through it. I love that as a goal, right?
Yeah. Yeah. All right. Thank you very much.
All right, thank
See you
you.
next time.